Greetings, cryptomaniacs. This is Crypto in 5. Wall Street's most iconic stock index just landed on a decentralized blockchain. The Fed just delivered one of its most hawkish signals in years, and markets are now seriously pricing in the possibility of a rate hike. And today, right now, we are sitting inside the largest derivatives expiry event ever. You paying attention? Let's go. This is Crypto in 5, daily, fast, no fluff. Our first story, S&P 500 on Hyperliquid. The S&P 500 is now on chain officially. On March 18th, S&P Dow Jones Indices, the organization behind the world's most tracked equity benchmark, licensed the S&P 500 to a platform called Trade XYZ, which has launched the first ever officially approved S&P 500 perpetual futures contract. It runs on Hyperliquid. What does this mean in practice? Non-US investors can now trade leveraged exposure to the S&P 500 24 hours a day, 7 days a week, directly on-chain. No broker, no market hours, no waiting for Monday morning. When news breaks at 2 a.m. on a Saturday, you can trade it right then. Hyperliquid's native token, is up over 10% on the news and is the top performing major crypto asset year to date in an otherwise red market. This is a genuinely significant moment. Traditional finance just trusted decentralized infrastructure with one of its most valuable brands. That doesn't happen by accident, and it will not be the last time. Today's second story, quadruple witching. Today is a quadruple witching day, and this one is historic. 4 times a year, on the third Friday of March, June, September and December, 4 major types of derivatives expire simultaneously. Stock index futures, stock index options, single stock options and single stock futures. Traders must close, roll or settle all of it at once. Volume spikes, volatility spikes and markets get weird. Cole Kennelly, CEO of Volmex Finance, says today's event could drive a spike in cross-asset volatility, pointing to the Bitcoin implied volatility index already trending higher into the event. Bitcoin's track record on quadruple witching days is fairly muted on the day itself, but consistently followed by downside in the days and weeks after. That's the pattern worth watching. And it doesn't stop today. Crypto has its own 13.5 billion derivatives expiry coming up on Deribit on March 27th, where positioning points to elevated demand for volatility strategies rather than strong directional bets. Sorry, chewed that up, didn't I? In other words, traders aren't making big directional calls right now, they're bracing. So plan accordingly. Story 3 for today, the Fed, Iran and Bitcoin. The Federal Reserve just delivered what markets are calling a hawkish hold, and it is rattling crypto. On March 18th, the FOMC voted 11-1 to hold the federal funds rate at 3.5 to 3.75%. On the surface, a hold, but dig one layer deeper and it's much more aggressive than that. Chair Powell pushed back hard on the idea of near-term rate cuts and sounded notably hawkish on the inflation outlook, sending stocks lower immediately after the press conference. The dot plot now points to just 1 rate cut this year, a big shift from earlier expectations of 2 or 3. The driver is of course the Iran conflict. Oil is up 50% since the conflict began, pushing inflation higher and weighing on growth. The Fed's preferred inflation gauge remains above the 2% target, running at 2.8% in January and 3.1% when you strip out food and energy. Here's the wild part. Markets are now pricing in a 12% probability of a rate hike, up from 0% just 1 week ago. Bank of America says it's not ruling it out. For Bitcoin, this macro backdrop is heavy. VanEck's mid-March chain check report confirms that long-term holder selling has actually slowed. Transfer volume is declining across every age cohort, which analysts are calling a potentially constructive signal. But Bitcoin has still been under pressure. Overall on-chain transfer volume is down 31% and daily fees dropped 27%, partly as trading shifts to derivatives and ETF products. So Bitcoin is holding around 70,700 today, with ETH at 2,158. Key support to watch is 69,500. Break below that and we're looking at 68,500. On the upside, 71,500 is the wall. Okay guys, so to recap, the S&P 500 is officially on chain via Hyperliquid, a landmark moment for DeFi. Today is the biggest derivatives expiry in history, with another crypto-specific 13.5 billion rolling in next Friday. And the Fed just delivered its most hawkish message in years, with markets now pricing in a possible rate hike for the first time since the tightening cycle ended. Macro is the story, stay nimble, and as always, this is not financial advice, do your own research. Please hit subscribe for a new episode every single day. See you tomorrow.